How will stock markets pan out in 2024? If that's the question that you've been asking, you are at the right place. Hello and welcome. You're watching this very special edition on our Outlook on 2024 series on Business Today Television. I'm Sakshi Batra. 2023 for the stock market investors, especially the retail investors, has been a year when they have truly made money. Despite the challenges on the geopolitical front, wars, inflation, rate hikes, Indian markets have scaled new milestones. 21,000 on the Nifty, 71,000 on the Sensex. The broader markets partied even higher and harder, with small caps clocking in a whopping 50% return. But the big question now is, where do we go from here? Will 2024 be another lucky year for investors? Well, to answer all of these questions and many more, I am now joined by one of the biggest voices in markets in India, Shankar Sharma, founder GQuant. Welcome, Shankar, and thank you so much for taking the time out. Season's greetings to you. Tell us, how would you really describe the year gone by for the stock market investors in India? And after the stellar heights that we've seen, where do you believe that we are headed from here?
Thank you for having me, Sakshi. And again, I heartily reciprocate the season's greeting. Merry Christmas, which is just in a few days' time, and a fantastic 2024 to you, your family, and to all the viewers of Business Today TV. Now,
Thank
to
you.
answer the big question, what happens in 2024? I think it will be more or less a repeat of 2023. We can quibble about a few percentage point here or there, but I don't see any major threat, at least to the small cap part of the market, which has been my favored area for the last 2 or 3 years over the large caps. That is, I don't see a big problem there at all. If anything, if there are problems, like we saw a couple of very quick corrections in the last two months' time, but as it turned out that they were just excellent buying opportunities. So I think 2024 will have a few of these dips, but they're all buy into the dip market, particularly for the aggregate of the small cap market.
Okay, it's a buy on dips market. Is there a number that you want to peg for, say, the Nifty and the Sensex, when we will be sitting on next December discussing the outlook for 2025? Where do you think both these benchmark indices will be?
To be honest with you, Sakshi, for me, the Nifty and the Sensex do not represent the real India anymore. They represent the elitist India of 30 or 50 companies only. Okay, so that's like the test cricket teams of the 70s, when only Bombay was pretty much the entire, probably 80-90% of the players for the Indian test cricket team came from Bombay. And now, over time, you've had hardly any player from Bombay, so it remains only a figurehead home of Indian cricket. But the cricketers now come from small towns, small, like Dhoni being a great example, and of course Yuvraj Singh from Chandigarh. I think the market has also broadened out away from just 30 stocks and 50 stocks
Yeah.
to like 500, even 1,000 stocks. So my view is that I'm not interested in the Nifty, large cap, or the Sensex itself. I am more focused on the BSE small cap or the Nifty 500 or the wider indexes, and I think they're headed for another at least a 10-15% a year, if not more than that.
Absolutely. You clearly are the sultan of small caps in India, if I may call you that, Shankar. And what a rally that we've seen here already, a 50% surge on the Nifty small cap index. And, largely, like you pointed out, the retail investors are attracted to this entire broader market space, and they have truly made money here. But, what about the fear of, say, overheating and valuations? Do you have that at all, or do you still believe there's a lot more leg to go when it comes to the broader markets rally from here?
So, Sakshi, let me make it very clear. Small caps, and I've said this along with my bullishness, I always give a little bit of a caveat, which is that this is not the easiest place in the world to make money in on a sustained basis. There will be very stomach churning roller coaster moves here. It's literally like going to Ferrari World in Abu Dhabi. Okay. except that that only costs a couple of hundred dirhams. In the small cap, when it is on the downswing of the roller coaster, you're going to lose a lot of money. We all do, okay?
Yeah.
Whether in terms of occasional market downturns or even problematic companies. Let's accept that as part and parcel of this territory. So I just want to give this caveat that don't go blindly into it. I mean, I'm very optimistic, but there will be problem market situations as well as problem companies. Therefore, therefore, my simple view is that if you bought a diversified basket of between 25 and 50 stocks in small caps, well chosen, I think you are going to beat the daylights out of any organized sector fund manager without doubt. Okay. So, I mean, let's not even believe that organized sector fund managers, because they have a lot of constraints, position sizing, sectoral caps, SEBI mandated, market cap differentiations. As an individual investor, you have no such constraint, which makes you even far better equipped to make money in small caps. Buy
Okay.
diversified 25, 50 stocks. I think you are going to be laughing all the way to the bank this year by December 31st and next year by December 31st as well.
Wonderful. So tell us, what is Shankar Sharma's money making mantra going to be for 2024?
So what I'm doing is actually, to be honest with you, is that almost every day I'm speaking to, a couple of companies, maybe three companies, figuring out that what are the things that I need to, spend money on. Of course, I mean, on Christmas Day, we will spend
Yeah.
some money on non-company matters, and on New Year's Eve as well. But I mean, after that, it's back to work, and the champagne and the cakes will be over by December 31st. After that,
Yes.
back to work. So I'm just trying to get a list of companies which look very good. And at the broad message I'm getting from my conversations is that looking at order books, looking at export numbers, looking at a variety of parameters, 2025 FY 2025 numbers look decently well placed, barring an Indian macroeconomic upheaval, which I don't see as a major chance of that happening. I think most companies that I speak with have very excellent outlooks for FY 25. Now, let's assume for a minute that they miss their 25% sales growth number, which I hear very often from the smaller companies. Even with 20%, we will be okay. Okay. So that's the point I'm trying to make. We
Okay.
have to work, particularly remember one thing. I just want to say this very clearly. In small caps, you have to work in ranges, not like an absolute number of EPS or absolute number of revenue growth. Unlike large caps, which are so well, let's say, micromillimetered in terms of what we want. It's 9 rupees 85 paisa EPS for this quarter, and if they do 9 rupees 65, it's a problem. In small caps, your tolerance levels have to be wider.
Correct.
So as long as if he says yeah 25% करूंगा उसने 20% ही किया है ना, we are okay with that.
Right.
Okay. So that's the way you play small caps. I think we are looking at a very strong FY 25 set of numbers. I know it's early, but I dare say we will make a lot of money buying decent companies, 25, 50 diversified portfolio. That's my mantra, Sakshi. It's not rocket science. Sometimes you don't need to do very exotic things. I mean, that's the point that most professionals, I mean, investment professionals like me need to, I mean, complicate things unnecessarily to keep ourselves relevant. I like to demystify things because
Yeah.
that's the way you can reach out and tell people that if I can do it, you can do it too. It just requires system, process, mindset, and obviously some experience as well, and you can do it yourself.
So you're talking about creating a basket or a diversified basket of 25 stocks from small caps. Which baskets are you talking about? Which are the sectors that you're going to be keeping your focus on when it comes to selecting stocks for 2024 from small caps?
Okay, so let me simplify this even more, Sakshi. Let's not talk sectors at all when it comes to small caps. Again,
Okay.
I think in the last conversation, also had said that sectoral, categories don't sit well in the small cap space because many of
Correct.
them are, in fact, they don't even have sectors, or maybe there's one or two companies in that sector. So let's not go there. I give you a different way to do this.
Okay.
And by you, I mean the viewers of this. And hopefully, as you said, we got 1 lakh views of the previous interview. And with my new look, hopefully, we'll go to 500,000 views. Okay.
Absolutely.
If the viewers like it. here is the way I would advise the small person, small investor, he or she, to make a good portfolio. Divide your 25, and better if you have 35. Okay, divide your portfolio on day one into market cap based filters. Okay, so choose the best ones that you can find based on your criteria. I mean, I'm not going to get into that because that's a long discussion. Okay, so pick 50 to 150 crores market cap as one filter. Okay, within that, pick out of your 35 stock portfolio, put about 5 to 10 of them in that, and then 150 to 500 another 10, and then
Okay.
500 onwards another 10 or 15. What you've done as a result is you bought into good companies in various market cap buckets. The reason for that is very simple. 5 years from now, you're not going to get supremely rich buying HDFC Bank or Asian Paints or levers. Okay, they will
Right.
ensure you don't become poorer. But here, the small person opening a demat account now wants to become rich. You're not going to become rich buying any of these. You want to you will become rich buying the three categories that I spoke about. Okay, the three smaller categories. So the 1,000 crore market cap, well chosen, can become 10,000 crores 5 years from now.
Right.
So when you divided your 35 stock portfolio into three categories, 50 to 150, 150 to 500, 500 onwards, you have got your foot in three different doors. Or in markets, as in life, कुछ ना कुछ तो करेगा ही ना अच्छा. As simple
True.
as that. You can't be that. इतनी भी राहु केतु की आपकी दशा नहीं होगी कि you will get 100% of your 35 stocks wrong. Correct?
Very true. Very true. So, Shankar, very rightly and very discreetly, you marked out these three categories, how to select 10 stocks each or maybe 25 stocks from. Tell us, what are your red flags and green flags when you pick and choose stocks from the small cap basket? How would you advise a fresh and new investor now listening to you and taking your advice and going ahead with this strategy, how to identify the red flags and the green flags within the companies in the small caps?
A good question. Very hard to answer. But there are two categories of companies. Forget the market cap. There are two categories of companies in India, or for that matter, any market. One category is companies that have been around for some time. So like 3 years or 5 years. Those are reasonably easy to figure out whether they are good companies, average companies, or terrible companies, because you
Correct.
have 3 to 5 years of maybe half yearly or quarterly data, depending on which segment they belong to, as SME or the main boards. Once you have that, all you need is a good Excel spreadsheet to put the numbers into the spreadsheet and see the consistency of those numbers. If the numbers are very volatile, then be clear that unless something is changing in the business, it's not going to become less volatile in the future. So that is your first thing. Less volatile numbers are better. Okay. I mean, I'm not talking 5 years, but at least a 3 year, which means 4 quarter numbers should be decently good. Let's start from 21, 22, 23. If those companies have delivered decent margins, decent numbers, and also more importantly, have done decent capex, that's a very important number. I look for that all the time. Decent capex numbers,
Okay.
which means that the management is optimistic of being able to utilize their capex. Okay. Now, these are simple filters. You can put them into any screener kind of app, and you will get a lot of output from those.
Correct.
Bad companies are easy to tell. I mean, numbers all over the place. Management is always in some problem or the other. Disclosures are poor. So the bad eggs are easy. Within the good eggs, you will find 150 good eggs. You need 35 good eggs. And they are not that difficult for 3-year-old companies. IPOs, which is the other category, is more difficult because you don't have enough published data of their historicals. You get very rudimentary data in the IPO prospectuses. Okay, they are very abridged. So that is even if you want to play that, I would not recommend more than 5-10% of your capital into IPOs,
Okay.
because the disclosures, managements have not been tested. Most companies in the first quarter or two of their post IPO listing will declare good numbers because they want to impress the markets. But 3 years from now, we'll know how they stack up. So IPO should not be a primary focus. Should be companies with 2-3 years of numbers, and that I can give you the filters as I just broadly told you. You will be pretty okay.
Okay. Okay, wonderful. And you talked about IPO, and I wanted to ask you on the IPO frenzy that we are witnessing, super exorbitant subscription levels, and of course the listing gains everybody is witnessing. How have you analyzed of late the IPOs that have come up on the street? And in 2024, you said that 5 to 10% max is somebody exposure that one should do to IPO space. But what is the kind of outlook on this space? Is this space really going to create money?
IPOs, if they are reasonably priced, will create a lot of wealth for you. Problem is that they are rarely reasonably priced because the incentive for managements or VCs or Ps exiting through the OFS or even the merchant bankers is to overprice and therefore price at a high premium relative to intrinsic value. Therefore, the money making in once you're buying in the listed space is very limited. First of all, you may not even get allocation. Even if you do, I don't think you're going to make any money buying most IPOs. Okay. I would rather wait for them to correct a bit before you buy them. Many IPOs actually, after a big pop, then you see some correction. If the companies are there that you like, wait for those moments, and
Okay.
then you can get in if you so want. Remember one thing, Sakshi, which people or in small investors or even large investors routinely forget. They become fixated on one stock or five stocks, and they say, "यार ये छूट गया."
Huh.
Damn, I missed it. I should have, or nahi mila, or price went up. Trust me, my biggest learning after 35 years of doing this is that it doesn't matter. दो छूट जाते हैं तो पांच और रहते हैं. पांच छूट जाते हैं तो
Right.
50 और आते हैं. We focus on the ball that is going to be bowled at us, not the ball that passed us without us hitting a boundary. Most people are focused on the one that they missed out on. I always, and that's the mental part I spoke about. You say, कोई बात नहीं है. There's plenty of fish in the pond. एक छूट गया, पांच और आएंगे. Once you start thinking positively, then you're ready for the next one. So I don't care if I miss out on a hot IPO or I did not buy something that went up 10 times. Forget it. It's okay. It's part of the game. You will not get 100% of all money making ideas in this market. It's not possible. Even if you get 5% of them, I mean, I think you're going to be, buying a house in London. So, I mean, that's the way to look at investing. That's
Wonderful.
really important thinking.
Wonderful. I think that is the sanest advice that viewers you can have with respect to the biggest learnings that Mr. Shankar Sharma is sharing with us after his 35 years, 40 years of looking at the markets and telling us what exactly is the way to approach and dealing with FOMO is most important. Speaking of FOMO, बहुत सारे ऐसे सेक्टर्स थे मिस्टर शर्मा जहाँ पर हमने ये देखा कि डार्क हॉर्सेस की तरह वो इमर्ज हुए. PSU सेक्टर्स, PSU बैंक्स, डिफेंस, रेलवेज. इन स्टॉक्स में अक्सर हमने देखा है कि फंड मैनेजर्स तक भी ज़्यादा फोकस नहीं करते थे, पैसे भी नहीं लगाते थे और बहुत सारे एक्सपीरियंस इन्वेस्टर्स को भी इस समय फोमो हो रहा है. तो अभी उनको आप क्या मैसेज देना चाहेंगे और ऐसे कौन से और सेक्टर्स हैं जो कि डार्क हॉर्सेस इमर्ज हो सकते हैं 2024 में?
So I can't tell you the second one, Sakshi. वो तो मैं बात नहीं करूंगा. लेकिन let's दूसरे जो पहला सवाल था, let's answer that. The point is this. वही सेक्टर चलेंगे यहां पर ओनरशिप इज द लीस्ट. ओके. PSU बैंक्स, डिफेंस और व्हाटएवर एल्स रैन अप, इनमें लोगों की उतनी रुचि नहीं थी. पीपल आर नॉट highly invested in them. We all disliked, I mean, I've disliked PSUs for the longest time. Defense has been very patchy. Railways, big disappointers over decades. So we are not invested in those. मार्केट का एक ही रूल है, जहां भीड़ ज्यादा है वहां पैसे नहीं बनेंगे, जहां भीड़ कम है पैसे वहां बनेंगे. लेकिन कब? द क्वेश्चन इज दैट व्हेन डज दैट फ्लेवर of the disfavored stocks or sectors come in, and that is the trick of the trade. That's when you really need to be supremely agile to see an under owned sector, okay, come into its own, and the over owned sectors start to basically lag. So financials, the private sector financials were highly over owned. Everybody and his uncle, सबके पास 40% of their funds वहां पर है. Maybe some have even overweights of 45-50%. People did not have the PSUs. Even within financials, the under-owned part surprised us. Now, when it came to industrials, we had the ABBs and the Cements and the other engineering companies, but nobody was going out and buying defense or going and buying railways because they had government exposures. We don't like company doing business with the government because payment and all that is always problematic. Under-owned again. So that's the point. Under-owned will always do well relative to over-owned, but the timing has to be right. You have to be able to time those big sentiment shifts. And for that, I don't think 99% of the people are equipped to be able to time those moves. If you are that 1%, you will never have that FOMO.
That's true, and very well said again. There was one more picture that I recently saw that you posted on Twitter. I think yesterday you posted that, the picture of 3 black swans on your Twitter. Is that an indication of a 3-pronged headwind that the markets may face now? And if yes, then what are these 3 biggest risks that one can probably face?
So first of all, I was at a safari park and I saw these black swans. By the way, this was the first time I was physically seeing a bunch of black swans. I'd never seen them before, and I just took a picture and I posted it. It was more as a joke, but there is always the potential for unexpected events in markets. Let's not rule it out. Again, as I say, कि market में ऐसा कोई perfect scenario नहीं होता है. And when things are so perfect, we should always focus on what can go wrong. In India, we know in the next 5 months' time or 6 months' time, we'll have the general elections.
Yes.
Everybody has a point of view on the elections. But even the leaders contesting cannot tell you for sure what it is going to be. Okay? Everybody will talk big. Everybody will say, I'll win or I'll form this, I'll form that. That nobody knows. It's like the movie producer saying that my movie is going to be a hit. Nobody can tell. Elections and political outcomes and movies, nobody can predict, how they turn out. And my next tweet, which I will reveal on this, is going to be that when we have had rubbish movies like Animal and RRR becoming hits, which I would have said should have tanked, why even try predicting stock markets? I mean, it's totally unpredictable how the crowd behaves. So the risk here is there is an election coming up, significant one. We'll see how the numbers are. It's not about majority or the same government coming to power. It's a number of seats that will have some effect. Second is going to be government spending. We know this current GDP growth has come on the back of significant government spending. Whether the government continues to spend at the same level post-elections as it has done in the last 2 years, that is the potential. Not saying it's a black swan. We should at least be cognizant of that fact. And the third black swan, frankly, is a black swan. We don't know. That's it. We just don't know. So we can know what we know, but what we don't know usually is the bigger problem. The unknown unknowns, as they say.
So COVID cannot be the third unknown, is it?
I don't think so. I think the market needs a new surprise for it to fall. The old ones, it loses effect.
Okay. What about the FII flows, sir? They've negated the losses of the previous year. 1.6 lakh crore rupees have been bought this time around. Of course, DIIs have been the superheroes of this rally. But next year, we're talking about rate cuts happening. How will that play out in terms of flows for India?
I think it's great. I mean, India, by the way, I've always maintained this on your show and elsewhere that, buy-sell activities of any entity, they don't matter. What matters is really fundamentals of a company and of the aggregate market and of the macro. And on all those fronts, India looks fantastic. So, and if rate cuts do indeed pan out, then more money will go into riskier assets. And, India, for whatever it is worth, belongs to the emerging markets, which means that more capital will come into EMs. And within EMs, India is absolutely top of the league. So India will get fairly decent flows. I mean, I have absolutely no doubt about it. And within India, the riskier category is small caps, which is where I am. So I love it. I mean, all the sort of things look fairly sort of positive towards EM flows, within that Indian flows, within that small cap flows.
And since you invest in world markets as well, what will your pecking order be when it comes to which are the markets that will outperform in this year, in 2024?
So India has been my number one holding for the last couple of years. Okay. The US surprised me, to be honest with you. I mean, all of these markets have gone into multi-year highs all
Yeah.
of a sudden, out of the blue. Uh, and in a way, and this is important, Sakshi, I want to take a minute to explain why they did what they
Sure.
did. And the reason is very simple. If you followed my tweets for the last 2 years since the inflation problem surfaced, right? Not even 2 years. I think it surfaced probably January. I've said 2 years. January of 2022. We are in January of 2024 in a few days' time. I've always maintained that inflation is the least of the problems for markets. The least. There can be many problems, a war or a pandemic or corporate fraud or macroeconomic problems in a country. That's all different. But inflation is the least problematic. And that is simply because the base effect scrolling takes care of inflation. Prices never go down. We know that. Something that was 100 went to 120, never goes down to 105.
Yeah.
Yes, instead of 130, it might go to only 124 because the rate of change slows down relative to the previous data print. And then central banks thump their chest and say, because of our policies, the inflation is under control. That's all nonsense. But we play with nonsense. There's a lot of nonsense in the world. Okay, we are not here to change that. We are here to interpret it and play with it. So inflation is a matter of time before the data prints become more benign, simply because the previous base was higher, which is exactly why the Fed, which has been caught napping, has suddenly made dovish noises that now we'll go down on the interest rate cycle instead of going up, because you just have to sit out an inflation cycle. So India sat out in the inflation cycle. Inflation is now looking benign everywhere. So we will benefit from the rate cuts, which will happen as a result of the base effect, which is now kicked in globally and also in India. As simple. I mean, look at our WPIs. I mean, they have come down sharply, not because
Yeah.
prices have come down, but because the base effect is making them optically look lower.
Fair enough. Well, I would have loved to continue this interview for many more hours because it is such a wonderful experience to listen to you and to the thought process that you shared with such simplicity with all our viewers. And in terms of the clarity that you clarity with which you explain to our viewers as well, the way we should look at markets and the way we should, and what really works and what does not work in the markets too. But before I let you go, what is the New Year resolution that you're going with right now? You have been on the fitness journey already. Is there going to be a mantra for reverse aging that you're going to share or something else?
Yes, so I have a goal to hit 12% body fat this year. I'm at about, I think, 18 or so. So yeah, 6% point reduction here. For me, that is real wealth. The stock market wealth, is there. I've seen that for a number of decades. But the health wealth is the real thing I'm after. So that's the goal.
Wonderful. Well, all the best to you, and always a pleasure having you and hosting you with us on Business Today Television. Many congratulations for having such a celebratory, decadal growth that you've seen along with stock markets of India and the world as well. And may that continue for you and your team at large and your family too. Many thanks for being with us on this show, and a happy new year in advance.
Thank you, Sakshi. Thank you for having me. Goodbye.
Thank you. All right, and with that, we will wrap up this very special conversation right here. But do stay tuned on to Business Today Television as more special conversations follow on the outlook of 2024. In case you are a fresh and new investor, don't know where to start when it comes to stock markets, this is your destination, because the best of market voices will tell you how do you make money in stock markets.